Gold slumps over 2% as US-Iran progresses, strong dollar dent safe haven demand. Global gold prices retreated sharply on Tuesday, falling more than 2% as easing geopolitical tensions lied to US diplomacy and strengthening dollar reduced investor appetite for the traditional safe haven asset. Spot gold declined 1.9% to $4,896.09 per ounce, while US gold futures for April delivery slipped 2.6% to $4,914.40, reflecting a broad pullback in precious metals market. Investor sentiment shifted notably after signs of progress emerged in nuclear negotiations between Washington and Tehran. Iranian Foreign Minister Abbas Araghchi indicated that both sides had reached an understanding on key guiding principles during their latest round of talks in Geneva, though substantial work remains. At the same time, US mediated discussions between Russia and Ukraine added to expectation of potential de-escalation in Eastern Europe, another factor weighing on gold's safe haven appeal. Market analysts noted that gold typically thrives during periods of geopolitical stress, with tensions showing tentative signs of easing. Traders move to lock in profits. If the US can avoid direct confrontation with Iran, market anxiety will likely ease, and that is negative for safe haven metal, said Jim Witkoff, senior analyst at Kitco Metals. Compounding gold's decline was renewed strength in the US dollar. The dollar index rose 0.5%, making dollar-denominated bullion more expensive for overseas buyers and further dampening demand. The currency move underscores how closely precious metals remain tied to US monetary dynamics and global confidence in the American economy. Investors are now turning their attention to upcoming signals from the Federal Reserve. Minutes from the Fed's January policy meeting are due Wednesday, followed by the closely watched personal consumption expenditure inflation report later this week. Markets currently expect the first US rate cut for the years to arrive in June because gold does not interest. It typically performs better in low-rate environments, making Fed guidance a critical driver for future price direction. Trading volumes were somewhat muted as several major Asian markets remained closed for Lunar New Year holidays. For now, gold's near-term trajectory appears closely tethered to US geopolitical strategy and Federal Reserve policy signals. Should diplomatic momentum continue and the dollar remain firm, the precious metals may struggle to regain its recent highs. However, any resurgence in global uncertainty could quickly restore its safe haven shine.